Ladies and gentlemen, quite a lot going on right now in the Bitcoin charts. Bitcoin is resting just above what I would call no man's land, which is the price zone between 74,000 and around 86,000, an area in which we've had very, very little amount of historical price action, and therefore our predictive capabilities and capacities in that price region are very low, because obviously our capacity to predict things is based on historical data within a price region. If we don't have much data, it's price discovery, okay? Price discovery is not just something that occurs to the upside at all-time highs. It occurs at any price region where we have no real track record of being there. Now, we're just above that zone right now, but even where we are right now, it's still a little bit shaky. The reason I'm making this video is to analyze what we're doing in this zone. We have formed a triangular structure. We do have a very, very important weekly candle close coming up in 2 days. And on the S&P 500, we're on support right now. Same with Ethereum and the altcoin market. So we do have a good opportunity here for Bitcoin, an opportunity to bounce. And we need to take it. We can't afford to lose this opportunity. And this opportunity to bounce is going to be exacerbated by the major news events coming up in the next 24 hours. One of them being the unemployment data, which we'll discuss in depth. And then we'll also discuss the fact that the Bitcoin reserve, the cryptocurrency reserve, there's going to be a meeting held at the White House for that. Going over the details, going over when they're going to be launching it, whether they're going to be launching it right now, just today as well. So big events today. We have to remember, guys, okay, when did the big move happen on cryptocurrency last? Well, we saw that big 11,000 US dollar pump upon the announcement of the Crypto Strategic Reserve just a few days ago. Now we have follow-up news for that Crypto Strategic Reserve. We could see another big move. So it's a waiting game here. Let's see what happens, ladies and gentlemen, before we get into it. Before we get into it today, guys, we have an exchange here that has never been hacked before in 3.5 years of being on the market. That is global non-KYC. You can sign up from anywhere in the world and use this exchange without a VPN. And furthermore, with my referral link down below, you can get a 15% trading fee discount attached to your account for life, as well as $8,000 plus USDT in trading rewards added to your account as trading bonuses for signing up with my referral link down below. This is big stuff here. It's an excellent deal. I reached out to them for partnership. They did not reach out to me. I don't get paid by them. The only thing I get is a referral link. And if you want all those things I just mentioned, which you should, trust me, I've done the scouting of the market, you can use my link down below to sign up. It takes 30 seconds and you'll get those rewards and bonuses and you'll help out the channel. I appreciate that, guys. Let's get into the content. Let's go ahead and delete everything here and just analyze from a blank slate. We have to remember what's happened in the past, because what's happened in the past and the indicators that have been relevant in the past are still relevant to us now, especially as upside break indicators. So we look at the recent price action, we look at the intense compression, the most intense compression we've seen on Bitcoin for over 2 years, literally on the Bollinger Bands and the daily chart that occurred just here at the end of February. That compression, you can see it marked clearly there in the Bollinger Bands, but it was more specifically marked via the Gaussian channel on the daily chart as resistance and the pi cycle line here in blue as support. These two levels, were being clamped together. Bitcoin was clamping, between and bouncing between those levels, building tension, forming. And eventually, of course, we had to have an explosion. We saw it to the downside, unfortunately. It would have been great to see it upwards, but we saw it to the downside. And those two levels that acted as support and resistance for such a long period of time, that gave way for the biggest compression in 2.5 years, they don't just stop being relevant because they're broken down, right? They're still relevant, and they're our upside break levels now. So until we get back over those levels, that Gaussian channel center line, that pi cycle line, those levels that were so important for Bitcoin in just very recent price history, we're not really in the clear at all. We're in a drop. Okay, we're in a drop, we're in a downwards trend with lower lows and lower highs. And so we are in a bad situation inherently on the short term. Then we punch in some lines here. We punch in the actual price range itself, which stems back from 2021 and 2017 respectively. You can see those two lines stemming backwards from price cycles, cutting through the price action and forming the macro range that we consolidated in for so long. You can see the end of that consolidation, the end of that compression zone there led to a breakdown of that macro range. We saw the strategic reserve being announced. We saw a pump back into the range. It was a fake out. We came back down and now we're hovering just below the range in a very deadly price region, which I'm calling no man's land. Now, we are forming some data in that no man's land. There is, because obviously there's not much historical price action here, but now that we're seeing price action there, the more we see it, the more we know what's going on. So we've got a few lines that I've been able to identify support there in red. We've got a triangle formation here in pink that's forming as well. And this triangle formation actually forms the basis for the analysis today. So we can stop talking about the past, we can talk about the present and the future now. compression within the triangle formation suggests that a move is coming. And another thing we can do to identify when that move will actually be coming for sure is looking at the news event. So we've got compression within a triangle formation just below our prior macro range, okay? We've got a stagnation here, consolidation in a short-term price region, and we've got big things coming up. One of them is the unemployment data, which is coming out within 8 to 9 hours of this video being released, and that's incredibly influential on markets. All we need to do to know that is look at this chart right here. This is a chart that shows the unemployment data in blue and the S&P 500's price action in red. And what you see is that when unemployment spikes, historically speaking, that is almost always, not almost always, but I think 7 out of the last 11 times. So more often than not, unemployment spiking to the upside has led to a bear market in the S&P 500. I'm highlighting a few occasions here. Sometimes it doesn't work, but a lot of the time, unemployment spiking is a bear market thing for the S&P 500. So we don't want to see unemployment spiking, obviously. That's why the unemployment data coming out is relevant, because we're seeing unemployment start to tick upwards. There's no definitive spike yet, like we've seen in prior periods of history, like we've seen in prior cycles. And ideally, the unemployment data holds out until the end of the year. That would give the cycle enough time to play out, because we're expecting a cyclical top in October 2025. So if unemployment data can just hold out for another 6 or 7 months, we will see a spike in unemployment and then a bear market triggered by that, and it'd be fine because everything would cyclically remain intact. But if it spikes too soon, it could be bad. And obviously we're getting a lot of economic news out of USA, tariffs, things like that. So things are a little bit iffy right now, and that's actually led to the Federal Reserve withholding on rate cuts. So a big changes in the macroeconomy recently, and unemployment data is a very integral part of that. So the unemployment data is going to be big. Obviously, if the unemployment data comes in larger than what we would want, we will see probably S&P 500 drop below its current support range and continue a drop downwards, which would be very bad, because that would make it highly likely that Bitcoin would do the same. Bitcoin would likely break below the triangle, and then we'd see Ethereum, which is on the edge of a cliff, and the total cryptocurrency market cap, which is on the edge of a cliff from the RSI, do the same. So we really want to be seeing that unemployment data come in well. And another big news event that is going to lead to a decision probably today or within 24 hours is simultaneously happening around the same time, by the way. Actually, the crypto reserve, okay, the crypto strategic reserve, they're holding a summit at the White House to discuss the specifics of that reserve and potentially even release that reserve. So obviously that's something that's had massive effects on the price in the last few days, and we can expect the contents of this meeting to continue to have massive effects on the price. So I expect a very turbulent 24 hours, and with that turbulence triggered by news events and charts, I expect an opportunity for Bitcoin to bounce. I hope it takes that opportunity, because the more time we spend below this macro price range, the more dangerous this situation gets for Bitcoin. So an opportunity here for Bitcoin, we need to take it, especially going in to the weekly candle close in just 2 days. Bitcoin, again, I'll say it again, has an opportunity to salvage this weekly candle. The biggest ever line on the Bitcoin chart, which stems back all the way from 2011, has been integral to structural moves on Bitcoin in the past, very influential as support and resistance in the past. Okay, support and resistance, not just resistance, but support and resistance. We are currently in the process of potentially breaking below that line. Now, we want to be salvaging that because in 2 days, we see the weekly candle close. If we can get back above something like 95,000 by then, triggered by these news events, it's definitely possible. That would be excellent. We would no longer be at risk on this chart, and we'd no longer be at risk of falling below our Gaussian channel on the weekly chart, which ultimately is the final line of support of Bitcoin. That's about 70,000 to 74,000. So all of this to say, Bitcoin has a chance here with these major news events in the next 24 hours, and we want it to take that chance. So potential for a bounce here, but either way, it's going to be turbulence. Either way, there's going to be volatility. So stay vigilant. I'm not really a believer in buying heavily here. I don't buy into uncertainty. I buy into confirmation. At this point in time, I don't see any confirmation to the upside. So let's wait and see. But that's my view, guys, and you guys can do what you want, of course. Thank you for watching. Hope you enjoyed. Please check out the Bitunix exchange. As I mentioned at the start of the video, guys, do you want 8,000 US dollars in rewards added to your account as bonus? Well, you can get them by signing up with my referral link down below, right? You also get a 15% trading fee discount with that referral link guaranteed attached to your account for life. This is an exchange that's never been hacked before, an exchange that is very low in trading fees, okay? And an exchange that is globally available, non-KYC from anywhere in the world. You cannot go wrong. Use this exchange. My link is down below to sign up. Last thing before we end it is the VIP group on Telegram. We post altcoin trading signals 4 times a week on VIP. You get a group chat with 160 other VIP members and immediate access to the posted trading plans that are currently on the pending trades list. So big stuff there on VIP. Check it out, guys. Only a couple more months to take advantage of that. I appreciate you. Have a good day.